And now for our next news special report.
This is a special report that's critical not just to your financial future, but to the very fabric of our republic. Across the United States, we're witnessing a phenomenon that's shaking the core of our economy, an avalanche of bank branch closures. Major financial institutions, the pillars of our economic system, are in a desperate fight for survival, shuttering branches in numbers we've never seen before. This isn't just a series of isolated incidents, it's a trend setting off alarm bells. So what's driving this sudden and dramatic shift? And more importantly, what does it mean for your hard-earned money? Is it still safe in these banks? We're diving deep into this crisis, uncovering the truths that many would rather keep hidden. You can't afford to miss this, especially the crucial final thought that I'll share. So stay with us as we unravel this financial mystery. And before we dive deeper, let's take a moment. Just like our banks are facing tough times, our bodies sometimes struggle too, especially with excess belly fat. It's the most dangerous kind, akin to how risky financial practices threaten bank stability. This fat puts pressure on our vital organs, much like how unrealized losses strain our banking system. That's why I and many others are turning to this groundbreaking solution. It's designed to reduce fat storage, speed up fat breakdown, and boost metabolism, ensuring your health stays robust, just as we want our banks to be. And for our viewers, there's a special 51% discount until the end of the month or until supplies last. Secure this offer at trimwithgary.com. That's trimwithgary.com. Now, in the heart of our great republic, a crisis is unfolding. As I speak, we're witnessing a startling and unprecedented wave of bank branch closures sweeping across the nation. This isn't just a minor hiccup in the financial sector. It's a symptom of a much deeper melee that threatens the very foundations of our economy. The banking sector, long considered the lifeblood of our economic system, is showing signs of severe distress. Major players like JPMorgan Chase and Bank of America, institutions that have stood as pillars of financial stability, are now in a scramble to shut down hundreds of branches. This year alone, JPMorgan Chase has closed, or is set to close, 159 locations. Bank of America follows closely with plans to shutter more than 100 branches. But why is this happening? Why are these banking behemoths, once symbols of American economic might, now retreating? Well, these answers are complex, rooted in a series of strategic missteps and external economic pressures. Firstly, there's the issue of unrealized losses. Currently, U.S. banks are sitting on a staggering $684 billion of these losses. For those unfamiliar with the term, unrealized losses occur when the market value of an asset held by the bank drops below its purchase price, but the asset has not been sold yet. These losses remain on paper until the asset is sold. The problem arises when these assets, primarily government securities, lose value in a fluctuating market. Banks are left holding these depreciating assets, eroding their financial stability. Additionally, we're witnessing an increasing number of loans going delinquent. When borrowers fail to make timely payments, it puts a strain on the bank's financial health. The recent layoffs of tens of thousands of banking employees are a testament to the industry's struggle to cut costs and stay afloat in these turbulent times. And the closure of the branches is not just a cost-cutting measure. It represents a seismic shift in the banking landscape. The rise of digital banking has undoubtedly played a role in this. As more customers move online, physical branches become less critical. However, this transition has left many customers, particularly older and less tech-savvy, feeling alienated and underserved. Adding another layer to this complex issue, Chase recently announced a significant change in New York City, directly tying bank operations to societal challenges. They revealed that several of their around-the-clock ATMs in the city will now close early, around 5 or 6 p.m., synchronizing with branch closing times. This decision, attributed to rising crime and vagrancy, is more than a logistical adjustment. It's a stark indication of how societal factors are directly impacting banking operations. Watch.
Well, Chase Bank says it's going to change the operating hours of some of its ATMs located in the city.
Yeah, citing crime and vagrancy. Chase says some ATMs will now close the same time the branch closes, around 5 o'clock, meaning you're not going to be able to walk into a vestibule after that hour to get cash or to do any banking at all. Chase is not saying how many or which locations are affected and whether or not it's a temporary measure. Some customers have gone on social media saying The bank should refund fees for using a non-Chase ATM. So this is going to be a big one, right?
This move by Chase not only reflects concerns about safety and security of their operations, but also signals a deeper, more troubling trend where financial services are being reshaped by external, non-financial pressures. This development ties back into the broader narrative of the banking sector's current state, highlighting how external social issues are interwoven with the financial challenges that banks are facing, further complicating the path to stability and reliability in our financial system. But there's more to the story than just digital transformation and unrealized losses. The very structure of our banking system is being tested. Small and mid-sized banks, once community staples, are now facing the threat of being swallowed by larger entities. The collapse of Silicon Valley Bank earlier in the year was a stark reminder of the fragility of our banking institutions. It revealed how quickly confidence can evaporate, leading to a bank run, a situation where customers rush to withdraw their funds fearing the bank's collapse. So this brings us to another crucial point, the role of consumer confidence. Our banking system, like many aspects of our economy, relies heavy on the faith and trust of the public. When that trust falters, the consequences can be dire. Bank runs, while rare, can trigger a cascade of failures across the industry. It's a delicate balance, one that requires not just sound financial practices, but also transparent and responsible communication from banking leaders. Now, the broader economic context cannot be ignored. The housing market, often a bellwether for economic health, is showing signs of distress. Pending home sales have plummeted to their lowest levels since records began in 2001, surpassing even the depths of the 2008 financial crisis. This decline in the housing market is a worrying indicator, hinting at larger systemic issues at play. All these factors contribute to a banking sector that's increasingly looking like a house of cards. The big banks, despite their size and resources, are not immune to these challenges. They too are grappling with the shifting financial landscape, trying to adapt to a world where the traditional rules of banking are being rewritten. In the midst of all this, one might ask, so what is the government's role? Surely the federal authorities are keeping a close watch, ready to step in if things spiral out of control. Well, regulatory bodies like the Federal Deposit Insurance Corporation, or FDIC, do provide a safety net. Their ability to prevent a widespread banking crisis is limited. Remember, the FDIC insures deposits up to a certain amount, but it's not a magic bullet that can fix the underlying issues plaguing the banking sector. The situation is further complicated by the mixed signals from the stock market. Despite the turbulence in the banking sector, the stock market has seen a surge in prices. This might seem like a good sign at first glance, but it's essential to look beneath the surface. Stock market fluctuations often don't reflect the real economy's health, and this disconnect can lead to misplaced optimism or undue panic. So where does this all leave us? Are we heading towards another financial meltdown reminiscent of 2008? While it's too early to make such dire predictions, the signs are worrying. Banks, the cornerstone of our economic system, are struggling. Consumers, still reeling from the pandemic's economic fallout, are growing increasingly anxious. The housing market, a key economic indicator, is in a slump. If there's a silver lining in this cloud, and that's awareness and preparedness, can all make the difference. As consumers and citizens of this great republic, we need to stay informed, ask the right questions, and hold our financial institutions accountable. It's not just about safeguarding our money, it's about preserving the integrity and stability of our financial system. If you got value from this report, tap subscribe. Remember, staying informed is the first step towards securing not just your financial future, but also the health of our nation's economy. As we come to the close of this report, it's essential to understand why this story matters so much to us as Americans. We're not just talking about numbers or branches or banks in trouble. We're talking about the heartbeat of our republic's economy. When banks struggle, it's a signal that the foundation of our economic system is under threat. This isn't just a matter of finance. It's about the stability and prosperity of our nation. And the wave of bank closures we're seeing is a wake-up call. It's a reminder that our financial institutions, no matter how large or established, are not infallible. It's a call to action for vigilance, responsibility, and informed decision-making. As citizens of this great republic, we have a role to play in ensuring the health of our economy. By staying informed, questioning the status quo, and demanding transparency and accountability, we contribute to the resilience and strength of our nation's financial system. This story matters because it's about our future. our security, and our legacy as a nation. So let's not take it lightly.
Congratulations, you made it to the end of the video. Now keep up your quest for truth with this next news report. And if you found our channel enlightening, join the millions who agree with you. Tap subscribe. Thank you for watching the Next News Network.